What's up? This is Mandela, and in this video I'm going to talk about trading the daily open and look at the significance of daily open levels to identify trading opportunities. For Bitcoin and crypto, the daily open is at midnight UTC. The open price itself can help to provide information which can help to gauge potential price movements. Since many indicators are centered around candle closes for specific time periods, this makes the open a time filled with information to analyze, as well as a time for studying higher time frame market structure to identify trends or potential reversals. Previous day's range can give an indication of intraday volatility and provide levels of interest, and daily opens can act as intraday support or resistance for a trading session or in future sessions, especially those marking the beginning of higher time frame sessions such as weekly, monthly, quarterly, and yearly. In January 2024, the yearly open was lost, and once reclaimed, it became strong support and market was full send. More recently, July's quarterly open was lost, then reclaimed as support, and then once it was lost again, it became significant resistance. Daily open can be a volatile time in a session for many reasons. Since it marks the beginning of a new session, this can lead to a surge in trading activity from traders and trading algorithms. This increased trading volume can cause sharp price movements, especially if liquidity is lower during that time, which is usually the case for BTC and crypto. For traditional markets, news or events that occurred outside of regular trading hours and pre-market trading can influence activity at the open. And for TradFi, if opening price is significantly different from previous day's close, it can create a gap. In addition, orders that have accumulated overnight execute as soon as the market opens, which can cause sudden price swings as the order book is processed. Daily opens for traditional markets are defined by different trading sessions for international markets. But for this video, we're going to mostly focus on Bitcoin, so we'll refer to midnight UTC. Different types of openings can give clues about the market's strength and potential direction. But remember, open is a contextual piece of information which can help to develop a bias, and its subsequent price action along with other factors that will present trade opportunities. Observing how the price reacts around the daily open can help to identify price action patterns, and these can offer insights into potential market direction. Many traders engage in opening bell strategies depending on how price action develops at the open, and some of these strategies don't even use any indicators. I've even heard stories of traders that simply long the open every single session and just trail stops. Some actually were very experienced, and depending on risk and position management, some actually had some success with this quote-unquote strategy. As positions rebalance, there's almost always at least some upward movement in price in a day, even if a bearish move develops. If you open a daily chart, it is nearly impossible to find a completely flat top candle, at least in crypto. So at some point, longing the open was a green trade in each session. Even if mismanaged, this could result in the trader getting wrecked. I prefer using some indicators, but we'll start out using pretty clean charts to take a look at a few daily open patterns I like to look for. Okay, the first type is an open drive. It's a significant momentum move right after the open. Daily open is usually above or below previous day value area, and with an open drive, no prices are traded above or below the open. This indicates strong conviction and trend potential, and more often than not, open drives won't fail until they reach some key level. So many traders look to get on board as these moves develop. A sustained open drive resulting in a trend day the entire session is very rare for Bitcoin, but happens a lot more frequently in traditional markets. Either way, identifying areas for potential reversals before entering, like all trades, is important. A more reliable low time frame strategy which can provide entries if you're looking at a potential open drive is the open high low strategy. Like open drive, this occurs more frequently in traditional markets than crypto, but it can still provide early session setups to trade. With open high low, when the open and low are the same, this is a buy signal. And when open and high are the same, this is a sell signal. This is more of a scalp strategy and works for quick entries and exits. It has high risk to reward, but it's easy and can be profitable with discipline. And it doesn't require much TA at all, though TA can improve your success rate. For a short setup, on the 5 or 15 minute, wait for the first candle to close. It should be big with high volume. The second candle should be a doji or small with lower volume, with range staying at least within half of the first candle. Stop loss above your entry or at the daily open and trailing some stops can be helpful. Open high-low can be on 15 or 30-minute charts if you prefer higher time frames, but if a strong move's setting up, you can miss a lot of it. This is a good setup if you're looking for trades early in the session, and it's a way to get on board with clearly defined risks in trending markets, or if a strong move is developing and you're on the sidelines. Open test drive is similar to open drive. Again, price opens outside previous day value area, but off the open, market tests a significant levels such as previous day value area or previous day POC, and then moves back in the direction of the initial open. This is essentially a pullback prior to the trend developing, and this is much more common compared with open drives, since market backtests a significant level before a move develops. However, there runs the risk of the daily open becoming support or resistance when price returns to it. There's two ways to enter this. For a long setup, orders can be placed between daily open and previous day value area high, or a more confident setup would be a reclaim of the daily open. The next setup is something to be wary of when playing a potential open drive. This is the open rejection reverse, which occurs when the market opens and moves directly to an important level, then reverses. It opens exactly like an open drive with a flat candle and moves away from daily open and previous day value area. Straight off the open, it will move to an important support resistance level, like a naked point of control, some sort of market structure or historical open level, and then it fails and reverses. This can result in a trend reversal rather than a trend day, which is a trade setup all on its own. This setup really isn't an open rejection reverse, but it was a nice setup and it kind of traded like one. The open rejection reverse is actually supposed to start by moving away from previous day value area. And though this opened outside, this moves straight back inside towards the value area and found resistance at previous day point of control and ultimately failed at the previous daily open. Identifying a significant level the market is moving towards and fading the move around that level can produce a successful trade. The last setup is really not much of a setup at all. It's the open auction. And it's a lack of momentum where the market opens within the previous day value area and chops around the daily open for a relatively range-bound session. This usually needs some time for value to develop, and it's pretty common, at least for crypto, to occur on weekends when there's less volume and liquidity anyway. But if you're really trying to trade it, you can look to trade the margins of the range, either the margins of the value area after some time within the session has passed, or previous day levels. In the next video, we're going to look at the initial balance and discuss some more early session trading strategies. Thanks for watching. Please like and subscribe and share if you think it's helpful. Good luck and see you in the next one.